Gold bars halve last week's $100 drop as dollar retreats. Gold bullion bars traded in London's wholesale market held above $1,840 per ounce on Friday, halving last week's $100 drop towards 4-month lows for U.S. investors as global stock markets also rose and the dollar fell from 2-decade highs on the currency market. Priced in other currencies, London settled good delivery gold bars regained 1.7% from Wednesday's 8-week low in euro terms and 2.0% from Wednesday's 7-week low in sterling. Trading at €1,744 and £1,478 respectively, that took the cost of buying gold bars back up to last Friday's level for Euro and UK investors. Gold's correlation with the dollar is not always negative, says a market update from the Mining Industry's World Gold Council, but rising interest rates can make gold less attractive if they raise the opportunity cost of owning bullion bars, or reflect higher economic growth ahead. Neither of those appear to be true at present. Growth expectations are falling and the opportunity cost, correctly viewed in real terms, remains historically low after inflation. With inflation running at 4-decade highs in the US, Germany and UK on the latest data, Friday saw the annual yields offered to buyers of US, German or UK government bonds edge higher but hold below the late 2018 levels hit earlier this month by US Treasury debt and 2015 levels for bonds and gilts. Recession fears amid market turmoil, says a headline at the Times in London. Goldman, J.P. Morgan strategists see recession fears as overblown, says a headline on Bloomberg reporting U.S. investment bank forecasts. European equities rallied Friday to erase this week's earlier losses on the Euro Stoxx 600 index, trading 4.1% above early May's 2-month low. Gold, in a downtrend since mid-April, has found a tentative bid amid continued turbulence across global stock markets, reckons a note from spread betting platform Saxo Bank. For gold bullion bars, a countermovement was overdue following a pronounced phase of weakness close to oversold territory, says German financial services group Commerzbank. The fact that the US dollar has been noticeably weaker means the upswing is continuing. Yesterday's fall from 2-decade highs for the US dollar saw a rebound in gold prices attract inflows to giant gold-backed ETF investment fund the SPDR Gold Trust for the first day in a month, needing 0.7% more shares in issue to meet demand and reversing this week's earlier investor outflows. Competitor ETF the iShares Gold Trust in contrast, also backed by the value of a large gold bar holding, held on track for its third week of investor liquidation, shrinking by 0.3% from last Friday. The price of gold kilobars landed in China, the precious metals' #1 household consumer market, meantime finished today at a premium of $1.25 per ounce against large bars traded in London, more than the incentive for new imports compared to last week and offering barely 1/6 the last 5 years' historic average.